Bitcoin fees are in free fall. Yes, you heard that right. Transactions on Bitcoin are near or at an all-time low. We got a report which details all of it. And we have the guy who wrote the report on the show. Let's kick it off. So, welcome back to Bitcoin Season 2. You know Charlie, you know Colin, but we have a third guy here today, Will Owens. Welcome to the show, Will.
Thank you so much for having me. I appreciate it.
You know, everybody's obsessed with Bitcoin's minute decline from like 124K down to like 113. That happens just every normal week. But what's different this time is that transactions on Bitcoin, stuff that happens on chain, that market is looking pretty dire right now. You cover a lot of Bitcoin mining stuff. This really affects like the long-term Bitcoin miner outlook. It probably hasn't affected it too much yet, but like maybe for the listener, like how important is it that we look at transaction fees right now?
I think that, well, first of all, it is very strange that, and we'll dive into this report here in a second, Will outlines a lot of this. It's extremely strange that Bitcoin is ripping to all-time highs and transaction fees are so low. I mean, the last time I think we really saw transaction fees keep up with kind of parabolic moves in Bitcoin, at least for a substantial amount of miner rewards, was like probably like 2017 or 2018. You had it a little bit in 2021, but it wasn't that crazy. And so the fact that we are having empty blocks or near empty blocks at a time when Bitcoin's at 120,000 is kind of wild. And on a longer term view, obviously, you want to make sure that miners have revenue outside of the block subsidy because eventually that's going to zero. I don't think that's a big problem right now, though. I mean, some miners are definitely struggling. Margins are thin, but the ones who have cheap enough power are going to be able to stomach it. The network will always be able to adjust to those things. But I don't know, my takeaway, honestly, from reading your report, Will, is just we need more people gambling again. We need the ordinals, degens, and the inscription guys to go out there and pump out spam so that miners can get paid.
I'm doing all I can. I eventually it's like pushing on a string and I can't get the degens to I can't rile them up anymore. We need new on-chain games, but okay. So we can make these qualified like statements like Bitcoin fees are down, but it helps to have the data. And that's where Will comes in. So Will, you wrote this report. Can you I guess, why did you write the report? It's kind of obvious fees are down, but like, was that just like, were you just like looking at this and you hadn't seen like a coherent study on this? Like, why did you put this report together?
Yeah, it's a good question. I guess I'll say one of the things I was kind of just thinking about, I was trying to think of like what the best thing to analyze on Bitcoin was right now. And I thought about like this idea of free blocks. Like I was kind of just sitting on mempool.space, just like looking at transaction fees. And I'm like, so many blocks keep saying like 1 sat per VByte, one sat per VByte. And I'm like how many blocks are there where it's actually like that, you know? And so, I mean, I actually had the data for that. So that was probably like, one of my favorite charts in the report, I guess, was just like this kind of percentage of free blocks. And this is something that was like non-existent in 2024, just because of, how the fee market was last year. But yeah, I mean, so like once I saw that, I was like, all right, let's dive in, like see what's happening, right? Everybody's talking about Bitcoin, like, apparently everybody's buying Bitcoin, but nobody's actually using the chain. Yeah, I mean, I guess that's kind of like what went through my mind.
Yeah, and I'll have you like elaborate on free blocks, but I will pull up the report here. If you're watching on video, I'll pull up the actual report, but and we'll try to like describe what we're looking at. It's actually kind of confusing, I think, for most people who don't spend all day on mempool.space like you do, Will. Like it's actually kind of confusing, like how Blockspace is priced, what makes like an expensive block. So here's an idea. You run some charts, and one of the charts is you show median and average Bitcoin transactions. What is the difference between that and say something like the Bitcoin transaction fee rate percentile? I'm trying to
Yeah, for
get some
sure.
color on this. Yeah.
Yeah, for sure. I mean, so I kind of overlaid median and average Bitcoin transaction fee, right? There's always going to be kind of these like random outlier transactions where people like overpay, right? You can see like the multiple of how much people overpaid in fees. And so I feel like, that was kind of like a better way to visualize it, in my opinion, especially like during ordinals and runes stuff. There were people that were like willing to pay super high fees just to make sure their transactions went through, or I guess I should say like went through quickly.
Yeah, I'm looking at here, like if we look at April 2024, we saw a fee spike where the top, like the average transaction fee was like over $100, which is huge.
Yeah, there was one block I was looking at. It was right around when ordinals dropped, like literally the halving block.
Yeah.
I think it was something crazy like $200 or something, like almost. I don't know if it was exactly there, but like somewhere around there.
So then you have this.
Yeah. So the percentiles, they actually have a chart like this on mempool.space. This is kind of, so what I did here was I took all of the transactions and then essentially got the like 10th percentile transaction fee, 25th percentile transaction fee, and then like 50th percentile would be like the median, right? And then 75th percentile transaction fee and 90th. So you can kind of see like the distribution of, how these transaction fees are actually happening. Yeah, you can see like, ordinals launch, big spike, right? And then kind of there's all this on-chain Bitcoin activity, right? Everybody's talking about ordinals. People are trading a lot on chain, right? This is like the meta. And then obviously runes launch April 2024 and we see this huge spike. And then you look after that and it's just like where did everyone go? You know what I mean?
And that's when like the Bitcoin price was ripping too, from like summer 24 to today. This unrelenting, it's advancing to 100K plus. The way I kind of like think about it, when I try to explain like some of the nuance here is like, so a Bitcoin block it'll have anywhere from like 2,000 to maybe up to like 4,000 transactions in it, maybe on average, ballpark. And like, yes, you could have a few transactions in that block, pay something like, 1,000 sats per VByte, this crazy high amount. But if the rest of the transactions in that block are paying like a lower amount, the average fee rate for the block may be like a little bit deceiving. But when you have these bursts in activity and everybody is competing for transaction inclusion, then you get these really, really profitable blocks. Like you described, the one at the halving when runes launched, that was what was it, like a 27 Bitcoin, 20 something Bitcoin, like block reward. It was crazy. And I think, a lot of people they only look at one dimension of transaction fees. They just look at the current fee rate that is quoted to them by like their wallet software. They don't really get into the weeds on, like what the aggregate market is doing. And then you have this, you mentioned this concept called a free block, which is kind of the hot thing this summer. When you say free block, what actually what are you like coining there?
Yeah. So it's it's not actually free, right? This is kind of just like a term. I defined it as blocks where the average fee rate was less than or equal to 1 sat per VByte. And right, like I said, like this wasn't happening in 2024. And now we're starting to see, more and more blocks are actually free blocks. Kind of concerning if you're a miner. Like we've been seeing a lot of these miners have been kind of pivoting to like HPC type stuff, just for like more, consistent revenue streams, I guess, right? Like as I guess every halving, the block subsidy, it's decreasing. So miners are kind of hoping that transaction fees become a bigger piece of the pie and their revenue. That's just not happening. Like perhaps it'll start to happen, but like I'm not trying to be alarmist at all. I'm kind of just analyzing the data as I see it. And just, saying it how it is.
Yeah, I also try to like walk the tightrope of, am I fudding or am I just trying to like show the data and identify a trend? Colin, do you talk to miners all the time? Do you see miners even at all concerned with this? Are they even aware that we've had really, really low transaction fees?
They'll definitely be aware of it because, if transaction fees were where they were during, the big splurge in Q3 of 2024 with ordinals and inscriptions, they'd be making anywhere from 15 to 20% more, from transaction fees to their bottom line. I do think that over a long enough time frame, it becomes more concerning. But like right now, with Bitcoin's price being up, they've been able to shore up, their revenues a little bit. Hash price did get really, really choppy there, like $35 petahash per day for an all-time low. And so a lot of miners were like near break even, depending on what your electricity price and your joule per terahash for your fleet was. But I do think this becomes like, let's fast forward like 4 or 5 years. Are we still at this point after the next halving? That's when I would start to get a little more concerned. All of it's also though contingent on Bitcoin's price, right? Because theoretically, over a near to midterm time frame, there's an argument to be made that if Bitcoin's price appreciates at a rate fast enough, then the subsidy will still be worth quite a lot, and it won't really matter what transaction fees are doing. But I'm also of the mindset that ultimately, like Bitcoin mining is going to just move closer towards the margins in terms of where electricity is produced. And like you're going to have a point where, like per what Will was saying about the AI and HPC pivots, right? The massive kind of industrial scale mines that we're used to will take on a much different form. I don't think like your Rockdales are going to exist. If they do, they're going to be at the site where energy is produced. And I think eventually most hash rate will shift towards that. Because it will, to Will's point, when we're talking about transaction fees, you are going to have some pretty crazy fee variability when transaction fee revenue eventually supersedes the subsidy.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
There's a bunch of places we can stick arbitrary data on Bitcoin. And one of those places is op return. Now, for the casual listener, they probably don't distinguish between where the data is. But if you roll the clock back, as Bitcoin in its early days, like tried to grapple with the reality that people are using it, not for primarily monetary transactions, kind of as a release valve, this concept of the op return was created so that we just say, here's kind of an enshrined place where you can put little bits of your arbitrary data. Now, in the year of our Lord, 2025 and 2024, really, this has kind of taken on a new personality as we have ordinals and inscriptions, which put data in different places. But op return, Will, you go into some explainer in this report. And I think it does help give some character and color to just like the nature of the types of transactions happening on Bitcoin. So I have this chart, Will, which is the transaction composition chart. It's a great chart. I'm showing it. Can you talk me through like what this chart describes and I don't know your thoughts or comments on it?
Yeah, I mean, so in black we have the like non-op-return transactions, right? So these are like strictly monetary transactions on Bitcoin. And then in blue, we have, transactions that contain like op-return outputs. And so this could be a lot of different things, right? Like runes transactions are considered this. Recently, we've been seeing like more and more people using op-return to kind of like anchor data on the blockchain. For the normal user, it's not super easy to find this data. Like you actually have to go in a block explorer and kind of like inspect it yourself. I also really like this chart right above it. It's like the all-time one. And you can see like with the launch of runes, that kind of huge spike in blue, where it was previously, all black.
And for the listener, you see basically since Bitcoin's genesis in 2009, op returns pop up when they're kind of enshrined in 2014, maybe 13, and then op return transactions as overall like makeup of transaction composition show their head in 19 a bit when some Chinese were getting.
What's the spike in 19 and 2020?
That was some like Chinese degen thing. I forget. I remember looking this up a while ago. Will, do you know this off the top of your head?
I need to look into that. I saw it and I only looked into the runes.
Okay. I can figure this out. Maybe I'll circle back in the show notes or something. But basically, as a general rule of thumb, if you don't know what's happening on chain, 9 times out of 10, it's China doing something crazy, which goes for ordinals too. But then, so again, for the listener, we have the op return spike during the runes launch of April 2024. Then Will, we're going to get to Flex Galaxy Digital's giant op return press release here. One of my favorite examples you guys used. I'm pulling up mempool.space here. Can you kind of tell me the story behind this op return that I'm looking at? It's a pretty cool thing that you guys did.
So, kind of everyone in crypto is aware that a Bitcoin whale from the Satoshi era sold 80,000 Bitcoins. And, at Galaxy, we kind of wanted to, like, we announced this in, kind of a press release. And then we thought, it was probably made sense to actually announce this on the Bitcoin blockchain. So that's exactly what we did, right? And you can see in the op return of what I linked in the report on mempool, the actual official announcement is included.
It is kind of cool. I mean, I think it makes sense for Bitcoin companies to publish stuff on Bitcoin for notable things like this. It's fairly cheap. Like you guys published this for, what is it? $94 total. So under $100 to kind of issue this press release. And it got a lot of circulation, just because of the nature of its transaction type. And it's really not that much data. So, that is pretty cool. Colin, how much have you been following the relaxing of op return standardness in the latest Bitcoin core release? Because that's the next section of this.
I have not, Charlie. Would you enlighten me?
No, I'm going to say, Will, you should explain this. You've got this great section here, Will, because Bitcoin Core version 30 has a spicy release.
I mean, from what I understand, Bitcoin Core is removing this kind of like long-standing default limit of 80 bytes for op return data in transaction relay policies. And so, nodes will be able to accept up to, I believe, 4 megabytes of arbitrary data per op return field in transactions. But yeah, an important distinction I made was that, it's not like this is necessary for miners or node operators to mine or relay these transactions. It's like the choice is kind of like left up to them. But yeah, I mean, we have, we always have this like discourse on Twitter when there are these changes to Bitcoin. A lot of people are kind of talking about concerns for spam, right? All this different stuff. But like we were talking about earlier, perhaps it's actually beneficial, just because we need fees to come back, right? And we kind of want to increase on-chain activity on Bitcoin. But yeah, curious your thoughts there as well.
My opinion is that op returns are pretty much harmless and have zero net negative benefit. And whenever relay policy does not match consensus, and yet users are bypassing relay policy, that has net negative effects on node operators. For example, if you don't know, because you're filtering, you don't know what the landscape of transactions looks like, your node is worse at estimating fees. It also means your node has to use more bandwidth whenever a block containing transactions your node did not see comes in. So it's kind of a net negative for overall node topology and bandwidth. But these are like obscure technical things that
they're important though, and I feel like they're not raised in the filter debate enough.
Yeah, well, that's why you're sane, Colin. That's why I've been staring into the Nietzschean void too long here.
But my take on the op return thing is if people really want to make these transactions, they can already do it anyway through out-of-band payments or through something like Slipstream. So it makes sense, and for all the reasons that you also just listed, Charlie.
You have the last section here on the report, Will, which I think is pretty interesting. And this actually, I think, is one of the most underrated data points for describing the landscape of Bitcoin transactions. And you have Bitcoin held by script type. You thought the op return debate was obscure. Describing Bitcoin by output script type is even more obscure. I'm going to throw this to you, Will. How do you try to explain this to an average person, what this section describes?
I would just say, mempool.space did a really good report on this earlier, kind of analyzing the UTXO set. I believe it was in May. And, we always hear this stuff about quantum computing's impacts on Bitcoin. Different script types have different quantum implications, most notably pay to pub key, just this early legacy script type. These outputs directly contain the full pub key. So, if a sufficiently powerful quantum computer was able to derive private keys from public keys, these outputs would be, immediately vulnerable. And so that's one, I would say that's probably the most important thing for most people to understand is just this is over 1.5 million Bitcoins. And then, you can see the breakdown, for all the other different script types, right? I think recently, pay to witness pub key hash overtook all the others as the one with the most amount of Bitcoins. But yeah, I mean, pay to taproot, right? This is the newest script type. I will say this one is very small in terms of amount of Bitcoin, but not as small in terms of amount of addresses.
And for anyone who wonders why, it's the degens have created this interesting phenomenon where the degens are posting their data to Bitcoin in one of the most efficient address types, pay to taproot, because they're making basically the smallest output possible with that. So that's a very popular output type, pay to taproot, but it doesn't really represent where people are holding the bulk of their actual Bitcoin, which is pay to witness public key hash. They do blur together. Will, I know that quantum is I don't know if you that might need a double tap on this, why why are certain address types perhaps more vulnerable, and why is my pay to taproot Bitcoin maybe less of a concern?
Yeah, so it's all about just if the public key is revealed on chain, right? And so for pay to taproot address types, the pub key is safe until the address is spent. So if the Bitcoin's unspent, the pub key is safe. And we've been seeing like all of this discourse about quantum stuff. We're actually going to be putting out like a longer quantum report and like implications on Bitcoin later on. So I'll say we'll be diving like super deep into that and everything there down the line. But yeah.
Oh, is that something you're co-producing, that future report?
This is mainly Alex.
Gotcha.
Yeah.
Shout out Alex. Yeah, I think the unspent Bitcoin by address type is one of the more interesting, like obscure characteristics of output, because a lot of these outputs are very old, which means the Bitcoin hasn't really, it's either not been moved in a recent time, or the Bitcoin owners haven't like updated the types of output, the types of like Bitcoin scripting that they are using.
I'll just say definitely check out the mempool.space report on like analyzing the UTXO set. That is super awesome. They have like some super good data in there.
Yeah, shout out to the mempool.space team. This brings into like zooming out this concept of paper Bitcoin summer, which is a fun meme, and it's as Bitcoin flows to like more custodians, this appears to simultaneously result in net less activity on chain. This kind of surprises me though, because like, do you guys think that users are actually just taking their Bitcoin off chain and putting it into custodians? Or is there like something else going on where people are just less interested in transacting on Bitcoin than they were before?
I think as we've absorbed more users onto the network, it's just the average user is not going to put up with self-custody. And, the learning curve is too steep for the average person probably. So those custodial use cases are growing much more quickly. And then you have no reason to, make any on-chain payments if you're doing that. There's also this consideration, and we've talked about it before. I mean, as more of the trading has moved to financial products like the ETFs, and if you think about all of the Bitcoin treasury companies, all of that Bitcoin is being custodied between like one or like two or three custodians. Like Coinbase, for instance, has over 1 million Bitcoin. There's no when trades go on for that, there's no reason for that to actually take place on chain. It's just paper swapping hands. I think that this was kind of inevitable. It's important that Bitcoin has tools for people who want to take self-custody, and there are some very good ones, and they continue to get better. But I think, the vast majority of Bitcoin was probably always going to end up being captured this way.
So I have two things. My first one is kind of pretty much exactly what he just said, right? When people are, buying and selling like the ETF, they're not actually transacting on chain. Like they're not, there's no transactions at the UTXO level on their end, right? And that obviously is going to dampen transaction fees. I would say my second point is that like more and more of the speculative activity has moved to faster and cheaper L1s, like Solana, for example. If somebody wants to get into crypto to trade meme coins, there's no real reason for them to be transacting on Bitcoin right now. Just because the UX is simply like not good enough compared to the alternatives. And yeah, I mean, that's, one of the biggest things I would say, right? Like all of these degen traders have kind of just left the Bitcoin ecosystem, or maybe not explicitly left, but like, it's gotten weaker over time. And that's a big reason why I would say is the user experience for actually participating in this kind of trading.
Yeah. This reminds me of one of my favorite reports also from Galaxy Digital back when Brandon Bailey was there. He did a report on like the BRC20, the spring 2023 BRC20 run, where he was able to kind of materially attribute, maybe it was him or maybe it was Gigi. I forget who's who. But, they did a really interesting report breakdown on like where the marginal buyer of Blockspace came from during the May 2023 BRC20 run. One of the more interesting reports on transaction fees I've seen. But Will, I'm glad you're looking at that. I'm glad the Galaxy team is on the case and tracking this. You guys have any final thoughts before we wrap this up?
Yeah, I mean, I would just say it's going to be interesting to see how it evolves, right? Like perhaps we'll start to see some more speculative activity come onto Bitcoin. It's, obviously everybody's watching like Bitcoin price action itself, just like everything there. But in terms of transaction fees, right, it's not looking too great at the moment. I'll definitely like keep everyone updated on this. I have all the data, so I'll kind of be refreshing it every day and seeing what changes over time. But yeah, I mean, it's going to be super interesting to watch.
Yeah, it's like the Bitcoiner's dilemma. Like you want transaction fees to go up for Bitcoin, but also you don't want to have to pay those yourself. It's a double-edged sword.
Yeah.
So,
okay. Yeah. Actually, that's a good point. One last thing I would say for users, in the short term, it's a really good time to like consolidate UTXOs. Very, very cheap right now. It's kind of like a temporary gift, cheap and fast transactions.
Yeah, I actually do have one last chart, which is over the net cumulative UTXO count on Bitcoin, which as we see kind of gradually increases until ordinals and inscriptions come along in 2023 and it rockets upwards. But then at the end of what I'd call like Bitcoin meme coin winter, we have a gradual decline. And that appears to be people finally consolidating their UTXOs. So if you're listening to this and you don't know what consolidating your UTXOs means, you should look at that because we want to protect you from yourself in 10 years when it gets very expensive to do that. This is Bitcoin Season 2. Thank you so much for tuning in. Thanks, Will, for hopping on. Love to see it. Glad to have you at Galaxy and great report.
Thank you so much. Yeah, I really appreciate it.